South African insurer Santam posted a 16% rise in first half profits today, boosted mainly by the underwriting business, but investment income fell as equity markets stayed weak. Joining us now live from our Cape Town studios is the company's CEO Ian Kirk. Ian, thank you so very much for joining us today. Great to have you on the program. As I mentioned, a 16% increase there on profits. Let's delve into some of the operational issues, if I could start off with that. Taking a look at the insurance side, we know that there has been, of course, a big focus on the real economy in South Africa, and many question as to how closely linked your business is to vehicle sales, for example, and what we actually see on the ground in South Africa.
I think we're more linked to the economy in general, the growth in the economy. If you look at our growth of our business, it's tied very much, if one looks back over the years, to GDP. Plus CPI, plus a factor of 1 or 2%, which reflects the developing nature of our economy here in South Africa. So it's not so much tied to one segment, the motor. Motor is an important part of the business, probably 40% of our business, more to the general economy, which is recovering a bit slowly, but it's recovering.
Absolutely. Let's touch on your reinsurance premiums coming in at 1.3 billion rand, and that's down around 8%, but your gross premiums up 7% at 8.2 billion rand. Why are we seeing such a big differentiation and divergence in the two numbers?
Well, we've taken sort of less reinsurance protection over the year. The growth that we've achieved, excluding our cell captive business, has actually been 9%. We're constantly reviewing our reinsurance arrangements to optimize the reinsurance spend.
So what kind of numbers can we expect on the reinsurance front going forward? I mean, you're talking about reevaluating the arrangements at this point.
Yes, I think we sort of are targeting around about 9% reinsurance spend. We think that's optimized. We may move either side of that, but not significantly. We think for many years now we've run our internal models, and we think we're buying reinsurance at the optimal levels.
Of course, what's also quite exciting, you have actually said that you plan to spend around 200 million rand on 3 acquisitions by the end of the year. We also know that you're working closely with Nigeria's First Bank. Is the growth prospects far higher on the rest of the continent than what we actually see in South Africa, where we know competition is rife?
Yes, I think there are opportunities. Certainly the growth markets are there. The higher level of growth is anticipated as the economies pick up and as insurance penetration in those territories pick up. And as you've indicated, our market share in South Africa is fairly high. So we think there are growth opportunities for us in South Africa, and also on the African continent. A lot of our initiatives we were working with our holding company Santam, and they're looking quite aggressively at Africa, at India, also at Southeast Asia, and to some extent we're just following really in their footsteps on the footprint that they are building. Yeah, I think the opportunities are there. We can play a technical partner role. I think there are a number of opportunities. The acquisition cost will not be that significant in a Santam context.
That's quite fascinating. And 200 million rand, and you're looking at acquisitions in Malawi, in Ghana, and in Nigeria before the end of the year. Tell us about the cost of actually doing some of these deals going forward, and why it is actually at such a low level.
Well, the businesses are not that large in a South African context. I mean, the South African insurance market dominates the African continent. So one really has to take a sort of a medium to longer term view to realize the potential. So in South African terms, these are not significant businesses. The one in Malawi operates in 5 countries. We've been invested there for many years. Over 20 years we've been invested, and we're looking at increasing our stake now as it goes forward. But one needs to take a medium to longer term view on the opportunities there for them to become significant in a South African context. They'll grow faster, but obviously the base of the economy and the insurance industry is not as significant as here in South Africa.
Absolutely. I mean, we are obviously dealing with a far more sophisticated market in South Africa, and of course delving into the African continent means delving into different needs. Tell us about how you structure your products on the continent, and you were talking about being a very big player in Malawi, or being in that region for quite some time. What are the needs on the ground, and how do they differ from the products that you actually offer to the South African market?
Not fundamentally, but most of our business in Malawi and in Zambia, Uganda and Tanzania at this stage is structured in the commercial market. The personal lines market is one that offers potential, but it will take some significant shifts in the disposable income of the population there. Yeah. So we see opportunities to introduce some of the more specialized commercial business that we've got and run here successfully for many years, as well as some of the personal lines, particularly in the higher net worth segments. But one must understand that these markets in Africa are not that sophisticated, and it's really at a developmental stage.
Absolutely. Well, let's just also take a look at the crowded market here in South Africa. You have cited that competition is increasing quite rapidly. What do you plan to do to maintain market share? And it seems that there's still a perception that insurance is very much about being a grudge purchase.
Well, I think that's one of the things we've tried to do in the last 6 months. We've repositioned the Santam brand. We've made it more attractive for some of the newer segments. And we've challenged ourselves in the business, and we've challenged our intermediaries, and we've challenged the supply base, our supply channel, to go out and deliver insurance good and proper. Because as you've indicated, it's become a little bit commoditized, particularly with the impact of the direct writers, where prices become an important thing. We think it's important that people go out and evaluate and take seriously their insurance, and on our side in Santam and for the industry, that we deliver good and proper. Getting back to your question around how we remain competitive, look, we've got competition across all the segments we operate in. We've had competition for years. We've got a 23% market share, significantly ahead of the next player. So I think we understand our business, we understand our market, we understand our competitive strengths, we understand the needs of the various segments, we understand what's important for the intermediaries and for the policyholders around service and product design, and we understand the value propositions that we need to deliver. And at the end of the day, it's all about the people. It's going out and delivering the service, the products that are required on a consistent basis. And that's in essence what we'll continue to do. Fantastic. We understand the competitive environment well here, and as you said, it is a very competitive situation. We've got new entrants, direct writers, the banks are getting stronger. But it keeps us on our toes, there's no doubt about that.
Fantastic. Thank you so much, Ian. Great to have you on the program. Ian Kirk, the CEO of Santam.